Good morning, everybody. Hope we're doing really good today. Welcome back to the channel. Humans have been refining and using petroleum products for cheap energy for like 150 years. And in that 150 years, that cheap energy source has helped us build the world and the society that we have today. But now, the consequences and the effects of climate change are becoming more and more clear and evident every year. And it's time that humanity kind of moves away and progresses towards renewable energy. In July of 2020, Joe Biden, when he's on the presidential trail, the campaign trail, he said that he wanted to get the United States to 100% green energy by the year 2035. And according to the International Energy Agency, energy demand in 2020 fell by 5% due to the pandemic, but energy supplied by renewables, that grew by 7% in the same time. In 2020, wind and solar energy produced 1,398 gigawatts of energy, and that's expected to grow to 2,349 gigawatts by 2025, and that's a 68% increase from where we are at now. So how can us as investors benefit from this trend? I have three of the best green renewable energy ETFs for this video. And in the past year, the space alone is up 100%. Some of these ETFs are up 500% in the past couple of years. But we still have strong tailwinds like the government initiatives to wean ourselves off fossil fuels and the need to combat climate change. And then we have the solar and wind power and these alternative forms of energy being more cost effective. They can compete with fossil fuels. Unfortunately, in this space, many of these companies are very small cap, maybe $3 billion, and some are smaller than that. And a lot of them do not consistently earn a profit. They're highly volatile. So that's why I'm going to talk about ETFs instead to help reduce our risk. First ETF we have is the Invesco Wilder Hill Clean Energy Portfolio ETF, ticker PBW, currently trading at 131 right now. This company has an expense ratio, or this ETF has an expense ratio of about 0.7%. And that's a little high, but this is a specialized ETF. It says here it pays a quarterly dividend of about 0.34%. And even this as an ETF has a pretty low market cap, assets under management of $3.2 billion. And as far as the yield goes, I found something weird. On Seeking Alpha, it says it has, a positive yield, but when you look on the investor fact sheet, it keeps showing this negative 0.45% by the SEC 30-day yield. And checking with Seeking Alpha, it looks like it's paying positive distributions. So I think that maybe this negative 45% or negative 0.45%, I think that must be coming from when they take out the expense ratio. So if they have a 0.34% yield, and then you took out their 0.7% expense ratio, then that would give us about a negative 0.45%. And that's where I think that number's coming from, but I can't be sure. PBW has most of its allocation, its geographic allocation to the United States, with 72% of the companies being located in the United States, with 12% in China. And its top 10 holdings, we have a lot of companies probably never heard of. There's a few that do pop up in here. Some notable holdings in this company is it has Tesla at 2.14% of the fund, NEO 2.11% of the fund, and Workhorse being 1.73% of the fund. And you'll see a few of these companies like this. Number 2, this Daewoo New Energy, Plug Power, and Green Power. You'll see those in these ETFs. Its 1-year performance is up 257%, and its 5-year performance, it's up 548%. Now this ETF is really on fire, but you can see that it's only in the past year that this company is, or this ETF has skyrocketed so much with the rest of the industry. Second ETF we have is the iShares S&P Global Clean Energy Index ETF, ticker ICLN. And this is trading at about $33 right now, and it has a lower expense ratio. I think this is the lowest of the three with 0.46. Pays a low yield of only 0.18%. That's really pretty much nothing. And this does have the highest assets under management of the three ETFs with about $5.5 billion. This ETF is a little more geographically diversified, with United States only making 36% of the number 1 spot, China about 10 or 11%, and then everything else a little more evenly distributed. This one has 51 holdings, and we have Plug Power, that's one that we've seen before, Enphase, and Daewoo is in this one as well. First Solar, there at number 10, is a popular solar stock. In the past year, ICLN is up 156%. And in the past 5 years, it's up 293%. Now, ICLN does not have exposure to Tesla, NEO, or Workhorse. Specifically Tesla and NEO, they've been on a big uptrend recently. And the other two ETFs do have exposure to those, so that could have something to do with why the other two ETFs outperform this one. Third ETF on our list is the First Trust NASDAQ Clean Edge Green Energy Index ETF, ticker QCLN, and it trades about $86. Out of the three ETFs, this has the smallest assets under management, with only 500 million under management, and the expense ratio is a little higher too, with 0.6%. A tiny itty bitty yield of 0.24%, but with something like this, we're not really investing for the income. This ETF has a lot more dedicated to Tesla and NEO. Tesla at 8.6% of the fund, NEO 7%. And having so much allocated to the fund can definitely be you can take some credit for why this ETF has gone up so much in the past year. Also has those names of Enphase and Plug. In the past year, it's up 225%. And then in the past 5 years, it's up 515%. The few names that are common in these top 10 holdings, the first one is Plug Power, and they produce hydrogen fuel cells. Next one's Green Power Motor Company, and they're a Canadian electric bus manufacturer. There's Enphase, and they produce the software that kind of hooks your home into the solar panels and the other green energy. And then the Daewoo, I don't know how to pronounce that, Daewoo or Daewoo, it's a Chinese manufacturer of silicone. So if you wanted to look in a little deeper into individual companies, maybe these would be a nice starting point, looking at that top 10 holdings of these ETFs and then doing some more research into individual companies. but all these are a very small cap and they don't consistently make a profit. Any pullback will be sharp and hard, and you're going to need to make sure you have a good asset allocation and expect for these share prices to go down a bunch. Do your own due diligence and research before investing in any of these kind of companies. Go ahead and leave a comment down below if you have any good energy ETFs, or if you're invested in any of these small cap energy companies. Give me a like if you get anything out of this. Subscribe to the channel if you haven't. And then I'll put some other videos that we can watch over here. And then I want you to go have a good day, all right? Justin out.